All right, two tech behemoths in the after hours. Alphabet, of course, parent company of Google, and Amazon reporting. Apart from just the nuts and bolts numbers that we're seeing, we get some big news out of Amazon. Jeff Bezos to step down as chief executive officer, make room for a new CEO. Apparently, Mr. Bezos wants to focus on new products and early initiatives. Let's bring in Dan Morgan, Vice President, Senior Portfolio Manager at Synovus. And Dan, before we dive into the numbers, I want to start there. I mean, you think Amazon, you think Bezos. What do you think of this move?
Well, it's kind of reminiscent to what happened to Apple when their founder kind of stepped down, and also Google. Remember when they had their two founders kind of stepping down and kind of finding a different role and leaving the operation of the company on a day-to-day basis to somebody else. So I don't think it's too odd for Jeff Bezos to want to do this. Obviously, he's more of a concept and creative guy, so I think it sounds like he wants to, like you said, focus on generating new businesses and new ideas, opposed to kind of that day-to-day grind of running the company. So I would construe it as a positive.
Yeah, positive. Yeah, frees up, I guess, his creative mind a little more to explore and perhaps do good things for Amazon. As we dig into these numbers right now, I know you and I were trying to find the AWS number for Amazon in the fourth quarter. So here it is, net sales of $12.74 billion. It's a little, I mean, it's pretty much in line, but a little bit shy of what the street had been looking for. I know you were looking at that number in particular. What does that tell you?
Well, Greg, I mean, like you said, it's pretty much in line. You know, we're looking for $12.7 billion. That was about a 27% year-over-year growth rate. I think the biggest, knock that you could give on Amazon or AWS has been the fact that that overall growth rate has been obviously deaccelerating. And you kind of compare it to, let's say, Microsoft Azure that reported last week. You know, that was up 50%. So obviously a bigger base to work from, but I think overall it's still a pretty solid number. As you said, Greg, it's pretty much in line with the expectations. So I think we'd have to kind of walk away from that number saying, hey, they met expectations, and we have to expect that the overall growth rate is going to start to deaccelerate just because the base is so much larger.
With a larger base, when I think of even the catalyst of the pandemic itself for a business like Amazon, obviously there's a strong business case to be made for what they supply and what they serve. But as life hopefully starts to change this year in 2021, I mean, and Amazon's always operated on the thinnest of margins. How do you think they progress in a post-pandemic world?
Well, I think they're picking up a lot of new business, Greg, right? There are certain people, not like you and I, but there are people out there that really didn't do a lot of ordering over the internet. There might be people that are been cautious to receive basic things that way. But I think the pandemic obviously has moved them towards that, and that behavior may continue beyond. So I think it's something where the pandemic is going to stay with us, or at least some of that buying behavior over a very long period of time. So kind of like a Netflix, let's face it, Amazon of the FANG stocks is probably one of the better positioned one, and I think you'll have a residual effect going forward in terms of changing behavior towards using their service. So I expect them to continue to do very well. Yeah,
definitely. Once you sort of get hooked into the ease of it, you fall into that ecosystem. That's Amazon. Let's talk a bit about Apple. Apple. I always want to say Apple. Alphabet. I wish they had just stayed at Google. Some of the numbers here. The top line number, $56.9 billion. That's better on the top line, better on the bottom line, and the cloud revenue coming in pretty much in line, just a bit of a tick stronger. What is the Alphabet? And it is up 3% in the after hours, so investors seem pleased.
Yeah, Greg, so I mean, obviously top and bottom line EPS revenue was a huge beat, just like Amazon. And again, we keep zeroing in on that cloud business, right? That's what's sexy right now, right? So GCP pretty much coming in line with expectations. That's going to represent about a 49% year-over-year growth rate, at least based on my quick calculations here. So you can see the difference between GCP with a smaller base like Azure having a much higher year-over-year growth rate than AWS. But it looks like with the new reporting that they're going to be doing and breaking out numbers better in terms of getting YouTube revenue and GCP and so forth, it's going to give more clarity to exactly what's behind the hood, so to speak, with Google. So it looks like both numbers, to be honest with you, Greg, were huge beats and very strong. But I'm sure they're going to be analysts out there, they're going to nitpick, right, that GCP and AWS kind of came in line with expectations and they were hoping for a little bit better, right?
Yeah, exactly, Dan. We know that the tech stocks led in 2020, right? And we look at the S&P 500, and every time we look at the impressive performance, we pull out a few of those big tech names. It's not quite as impressive. But as we take this and the investors digest more of it, what do you think it tells us overall about the tech investment environment?
Well, we're still very positive. I mean, last year, the overall tech earnings per share growth rate was only about 4%. This year, it should be around 14%. I think consensus S&P 500 is around 22%. But to be honest with you, Greg, there's a lot of things built into those numbers, right? Which is, rollout of the virus, people getting back to normal behavior. So everyone's kind of banking on these cyclical names, like materials, industrials, and financials. If that doesn't come to fruition, I would expect the money to roll back into tech because that's where the growth is, and people are always looking for growth. So, I would expect tech to continue to execute into 2021 after a very strong 2020.
I know you have these are the two big after hours ones. I know you have your eye on some other names, including Nvidia and Adobe. Break down those stories for me.
Well, those are names that we don't talk about as much, but Nvidia is interesting because, we're all talking about GCP with Alphabet. We're talking about AWS with Amazon. Well, yeah, they provide the service, the data center, but who provides the chips that go into those? And that's Nvidia. They are in the same space with, let's say, Intel and AMD in terms of providing that. They're also a huge player in the gaming space with their graphic chips. They're a leader in that space. Adobe is, Greg, a name that you and I have known for a really long time. I've been following the stock for over 30 years, but the thing that makes them kind of interesting is they were able to make that migration into the cloud where some of their other software players like Oracle and so forth were a little bit late. And so they've been, really good at migrating over. And of course, we always see their name up on the internet with the PDFs that they create. So those are two kind of off-cuff names that we don't talk about as much as the FANG stocks that your investors could potentially look at. Obviously, it has to meet their risk tolerance and overall objectives for their portfolio. But those are some names that are on our buy list.
Dan, it's always great to get your insight, particularly on big breaking earnings news. We try to sift through these numbers. Always appreciate it when you take the time.
Thank you, Greg.
Dan Morgan is Senior Portfolio Manager at Suno.